Welcome, friends. August 16th, the market update desk with Scott Riley, NMLS number 157524. Well, it looks like we're going to end the week pretty darn close to where we started the week, specifically in bonds, mortgage backed securities, and even the stock market. We've seen, pretty decent. Pretty decent movements in the bonds and mortgage-backed securities, and major movements up and down within stocks. The equities, specifically the tech stocks. Today, a little bit of information, and this is all prepping for a big week next week. So today we got National Association of Home Builders starts, permits, completions data for July. So completions down 9.8%, for an annual run rate of 1.53 million. Now, specifically, the single family, that was up a small tick, a 0.5% at 1.05 million. Multifamily came in at just under 500,000, so it's kind of flat. So those were completions, homes that are ready to go, ready to be sold and moved in. Starts, this is the inventory that's getting ready to come on the market in the next 3 to 6 months. Single family, down 14%. Total starts, down 6%. So the single family starts were at an annual rate of just under 1.85 million. And that's well below where the market really needs this inventory to be. And permits, this is going to tell us what our future supply is 6 months out. So permits were down 4%. Single family accounted for down 1/10 of that to an annual rate of about 0.94. The reason this is so important is we're already tight on inventory, and our builder partners are having significant headwinds right now. In fact, I was talking to one of my buddies today who is well in the know on the construction side, works with a major builder. They are having meetings right now about the headwinds from financing for development. With the Fed rates where they are in a very restrictive policy, this is putting handcuffs on builders to make the numbers work to get more homes built. Definitely the opposite of what we want. And they're very unsure going forward. And we're seeing continued restrictions and handcuffs on builders from a development standpoint and on energy efficiency requirements, things for permitting. Not that that's a bad thing, but keep in mind when we keep escalating the minimum requirements and trying to get to a peak of multiple things within a house for homeowners, we keep increasing the costs. Not that those things unto themselves are not bad things, but what the media and the politicians don't include in that calculus is the fact that homes are going up in price because of the mandates that are being put on the builders specifically. So this puts additional pressure on them. And that's why we're seeing what appears to be an unfortunate slowdown in future builds. So development restrictions within townships, cities, counties, development cost to carry for the interest rate, and requirements to put in homes, increasing the price. All we hear from the media and politicians is we need more affordable homes. Well, we can't get more affordable homes if we continue to increase the mandate on what's in the homes, because that increases costs. One has to give. It's just simple math. Next week, we have a very, very important week. I know I say that a lot, but on Wednesday, we have the Fed minutes from the last meeting. That's always important. We have a 20-year bond auction. Keep in mind, the last two bond auctions for 20-year has not gone well and has not played out well in the bond market and the pricing for the 10-year Treasury. And here's the linchpin to the whole week. It starts the Fed symposium at Jackson Hole. This is one of the big speeches that the chair gives, Chair Powell in this case, on monetary policy going forward, where they think we are right now, and where they want us to get to. When we talk about that, we talk about what the new terminal Fed funds rate needs to be. Most analysts are saying 150 to 175 basis points less than where we are now is where we need to get to make sure that we don't have a negative effect on what we're trying to accomplish with a Goldilocks / soft landing from the economy. So Chair Powell's speech is going to be critical, and the traders and economists are looking for him specifically to lay out the path of how long is it going to take to get to that new terminal rate? What's that roadmap going to look like? And do we see any bumps on the road? So that's what's going on in preparation for next week. What does that mean? Let's get busy, help you get you pre-approved right now so you can take advantage of these great rates that are out there and great loan programs to help you get in a house. Give us a call. We'll help you out, 616-293-2189. We hope you have a great week. Keep in mind, do us a favor, share, like, comment on these on all our socials. The Market Update Desk. It's your original singular market news source for West Michigan. Take care.